Walter here. Welcome aboard. Glad to have you here. We're going to talk about diversification and managing your risk. Now, a lot of traders understand this idea of trying to manage your risk or improve your overall troughs and valleys, so to speak, by diversification. And so in trading, a lot of times what we do is we'll say, okay, I've got this strategy and it works really well. So what I'm going to do is I'm going to take this same strategy and I'm going to trade it not only on the 4-hour charts, but I'm going to trade on the daily charts and the 1-hour charts, 15-minute charts, and all that. And that's great. That's great. But what you will do when you do that, or you might, that's one thing. But even more so is people say, I'll trade it on the yen, the dollar, pound, the loonie, the Aussie, the Kiwi, the CAD yen, the pound yen, the euro yen. I'll trade all these pairs like that. The issue with that, it turns out, is that the markets are very correlated nowadays. The reason why is because all of these arbitrage opportunities are being sucked out of the market. And you can see it actually happening right now in the cryptos. In the cryptos, there still are really great arbitrage opportunities. I know a 12-year-old who's doing this. He's making money by buying on one exchange and selling on the other, which is basically taking advantage of the disparity of prices. And so because of these opportunities, they've been sucked out of the market. And they're always available when the market's new. And then slowly they disappear because everyone's taking advantage of them and the markets align themselves across the world. Now, when I was, by the way, if this kind of stuff interests you, we're going to talk a lot about diversification in the Small Account Big Profits course. You can get in that course still. It's still open by clicking the link above or below this video and get more information about Small Account Big Profits. We're going to take a small $1,000 account and ramp it up as quickly as we can over 300 trades. So the goal is basically to go from 1,000 to 100,000. That's what we're going to try and do. So if this is interesting, you can check that out. So what I did when I had a job and I was still trading, and what I did in the job, they didn't know this because I was kind of like the stats guy. I would dig into my computer all day and I was actually creating trading systems, not really doing my job or doing very little of my job. And admittedly, it's true. I mean, there was a situation where the big boss at the end of the year is supposed to determine whether or not you get a bonus. And what they're supposed to do is at the beginning of the year, they tell you you're supposed to do this, this, and this. If you hit your targets, then if you do these things, then you're going to get your bonus, right? As long as the business makes money. And he never sat me down at the beginning of the year. And so he never set my goals. So at the end of the year, I wanted to see him squirm, and I wanted to see him explain why he would give me a rating out of 1 to 5 based on the fact that he actually never gave me, you know, I was kind of like stuck in middle management, you know. He never gave me targets to hit or whatever. So I was actually building trading systems. And one of the ones that I built, well, he gave me a 3, by the way, out of 5. He said, well, we didn't really talk about this, so I'll just give you an average score or whatever. It's pretty funny. But I built a neural network. Now, I don't know if you know much about neural networks, but they're kind of like the precursor to some of these hot topics now, like machine learning and stuff like that. With a neural network, all you're doing is you're feeding a bunch of correlations into the system, and it's trying to find where are the strongest relationships. So I would feed in the data about the DAX and the Nikkei and the S&P 500 and the ASX in Australia and the Euro Yen price and the USD CAD price and all this stuff. And what I was trying to do is predict the 10 exponential moving average of the USD Yen daily chart and the 20 exponential moving average of the USD Yen chart. So I was trying to forecast that in the future 3 days. That's what the whole neural network was. And I was astonished to see how correlated the markets are. Now, why am I telling you this? Because we're talking about reducing risk through diversification. And if you think that you're going to reduce risk through diversifying by trading multiple markets, I'm here to tell you it ain't true. It ain't going to happen. They are too correlated. They move in synchronicity, although one might go up and the other go down. So the Euro USD goes up and the USD Swiss goes down, whatever. The fact is that they are highly, highly correlated. They get more correlated over time and less correlated over time, and that kind of fluctuates. But the fact is, if you want to diversify, you're much better off diversifying by systems. So you have a system that does really well in range-bound markets. So, for example, like the Euro Pound, as we record this, is range-bound. the New Zealand dollar USD. A lot of these pairs are range bound right now, today as I record this. But they're not always range bound. They change and they go and break out and go strong trend. So you can trade trend trading strategies and breakout strategies. You can trade end of trend strategies and reversion to mean strategies. You can trade swing trading strategies and breakout strategies, where breakout strategies that like constricted markets and look for the breakout after that, and then the end of trend strategies like the really strong trends and they look for the end of the trend when it finally hits the end of the trend and then falls off. So all of those things can work. Now I like to trade multiple time frames as well. Now multiple time frames is one way to diversify. It's better than trading multiple markets with the same strategy, but not as good as trading multiple systems. And so people often ask me, they say, hey Walter, why do you trade the 6-hour charts, the 8-hour charts, the 12-hour charts? We don't have those. Well, you can get them, and I'll put in the link below this video, I'll put you can get an MT4 indicator that you can set that up. So I like 12-hour charts, 2-day charts, daily charts, 8-hour charts, 6-hour charts. Those are the ones I like. Those are the ones I've tested. And it's a way for me to get different setups. I'll see a kangaroo tail, for example, on the 6-hour that never shows up on the 12-hour. And you might see a big shadow on the 6-hour, but it turns out to be a kangaroo tail on the 12-hour. So some of them are going to, they're going to be similar. But sometimes you'll get in earlier. Oftentimes you'll get in earlier on the lower time frame. I don't like 4-hour because I have to watch the charts every 4 hours. I don't like that. I like to sleep. So 6 hours is about as low as I like to go. And anyone can get them if you're using MetaTrader. You can just use that indicator that I'll post below this video for you. So it's not that difficult. And it's not one of those things where it's like, you have to buy a NinjaTrader or something or TradeStation. Both platforms which I've used in the past, but it's not required that you do that. So hopefully that makes sense. So if you're going to diversify and reduce your risk, the best way to do it is to trade strategies that like different types of markets. The second best way to do that is to trade multiple time frames, and the worst way to do that is to trade the same strategy on several different markets. The other thing that I'll point out here is that sometimes as you get older as a trader, you may notice this already. Like if you've been doing this a long time, you'll notice that if you use indicators, you'll see a signal on the RSI and you've got the same exact signal on the MACD. It's one of the reasons why I don't like indicators. It's like all that's really telling me is that the price is doing something, because all those indicators are based on the high, the low, the close, and the open of price. It's all based on price. So it doesn't really matter if I'm using the MACD or the stochastic or the CCI or whatever. I'm going to see very similar setups around the same time on those indicators. So that's one thing, it's nothing magic about those indicators, at least from my point of view. So hopefully that makes sense. I hope that you guys have a wonderful day. Thanks for spending time here. And if you want to join us in small account big profits, you can click the link below or above. And I'll see you in another video. Take care. Bye.